Ladies and gentlemen, Asian guy here. There is a number circulating on the internet right now that, if true, means the silver market is already dead. The number is 160 million ounces. That is the amount of physical silver that some analysts are claiming BYD, the world's largest electric vehicle manufacturer, is about to consume in a single year. The narrative goes like this. BYD is producing 5 million cars. The new solid-state batteries require 1 kilogram of silver per car. Do the math. 5 million kilos. That's 160 million ounces. To put that in perspective, the entire planet only mines about 800 million ounces a year. If this rumor is true, one single Chinese company is about to swallow 20% of the global silver supply. If that happens, there's no silver left for Apple. There's no silver left for Samsung. There's no silver left for solar panels. And there is certainly no silver left for you. But here's the problem. I have looked at the engineering reports. I have looked at the chemistry. And I have looked at BYD's internal roadmaps. And I am here to tell you that the internet is wrong. They are conflating two different technologies. They are mixing up the present with the future. But, and this is the biggest but you will hear all year, the reality I uncovered while fact-checking this rumor is actually scarier than the fake news. Because while BYD might not be using 1 kilos of silver today, Samsung is preparing to do exactly that. And the supply chain shock isn't coming in 2030. It is being engineered right now, behind closed doors, with deals like the one we saw in Mexico last month. In this deep dive, we are going to separate the hype from the horror. We are going to look at the real math of the EV explosion. We are going to look at the solar pivot that is draining 40% more silver than last year. And we are going to look at why $67 silver is actually the bargain basement price before the real squeeze begins. Let's run the numbers. Let's start by dissecting the viral headline that set the internet on fire this week. World's largest auto manufacturer moving forward with silver solid-state battery. It sounds terrifying for short sellers, doesn't it? It implies that BYD, the king of EVs, the company that just sold 4 million cars in 2024, is switching its entire fleet to silver-heavy batteries. But we have to be precise. In this game, precision is the difference between making money and losing credibility. Now, I love silver. I want silver to go up. But we have to check the bias. Here's the truth about BYD's current fleet. BYD dominates the world because they are cheap. They sell cars for $15,000. How do they do that? They use a specific battery chemistry called LFP, lithium iron phosphate. Their famous Blade battery is an LFP battery. Why does that matter? Because LFP batteries are designed to be cheap and durable. They do not use silver in the anode. They use graphite. The only silver in a current BYD seal or Siegel is in the bus bars, the contacts, and the electronic control units. We are talking about 30 to 50 grams per car, not a kilogram. So if you run the math on 5 million cars at 50 grams, you get about 8 million ounces of demand. That is a lot. It's significant. But it's not 160 million ounces. It's not the market killer yet. Because while BYD is using LFP today, the industry is in a panic to switch to something better tomorrow. The LFP battery has a limit. It's heavy. It charges slowly. It has poor range in the winter, and this is where Samsung enters the picture. And this is where the 1 kilogram nightmare becomes real. The rumor about 1 kilos of silver per car isn't made up. It's just misattributed. It's not BYD's current tech. It is Samsung's future tech. Samsung SDI has verified that their proprietary solid-state battery uses a specific technology called a silver carbon Ag-C nanocomposite anode. Unlike graphite, silver allows lithium ions to move at supersonic speeds. This is the technology that gives you a 9-minute charge. This is the technology that gives you a 600-mile range. And the cost of that performance? Massive amounts of silver. Engineers are trying to thrift it down, but current prototypes suggest a usage of 0. 5 kilos to 1 kilo for a 100 kilowatt-hour battery pack. Now, let's look at the timeline. Samsung has announced mass production for 2027. Toyota is targeting 2027-2028. Even BYD has announced they are testing all solid-state batteries for their premium luxury lines. So, here's the new math. Let's say in 2028, just 10% of the global EV fleet switches to this Samsung-style silver battery to compete on range. Global production is expected to be 40 million cars by then. 10% is 4 million cars. 4 million cars, x 1 kilo of silver, garner 128 million ounces. That is the explosion. It's not happening this morning. But it is locked in for the near future. And do you think a company like Samsung waits until 2027 to buy the metal? No. This is why the deal we exposed yesterday is so critical. This is why Samsung paid $7 million to restart a mine in Mexico back in October. They aren't buying silver for today's phones. They are securing the supply chain for tomorrow's cars. They know that if they wait until the production lines turn on in 2027, there will be no silver left. They have to drain the mines now to build a stockpile for later. So the viral rumor got the company wrong, BYD versus Samsung, and the timeline slightly wrong, today versus 2027. But the conclusion is absolutely correct. The auto industry is pivoting toward a technology that the silver market mathematically cannot support. But if you think you can relax because 2027 is years away, you are making a fatal mistake, because there is another silver eater that is devouring the supply right now in 2025, and it is actually eating more than the EVs. I'm talking about the solar panic. While everyone is obsessed with cars, the real squeeze, the one that is happening this very second, is in the energy sector. For years, solar panels used P-type, pure C cells. They were efficient enough. They used a moderate amount of silver paste. But in 2024 and 2025, the entire Chinese solar industry, which controls 80% of the market, shifted to a new standard called N-type, TOPCon. Why? Because N-type cells are more efficient. They generate more power. But there's a catch. They use 30% to 50% more silver per panel. Now look at the numbers. In 2023, the solar industry consumed about 190 million ounces. In 2024, it jumped to over 230 million. Estimates for 2025 are pushing 260 million ounces. That is almost 1/3 of all the silver mined on Earth, just for solar panels. And unlike gold, which sits in a vault, or silverware, which can be melted down, the silver in a solar panel is notoriously difficult to recover. It is pasted onto silicon wafers. For all intents and purposes, once that panel goes onto a roof, that silver is gone for 25 years. This is a permanent destruction of supply. Now, combine the two stories. Solar is taking 30% of the global supply right now. Samsung and the auto giants are fighting to lock up another 20% for their future batteries. Investment demand, coins and bars, usually takes another 25%, 30% plus 20% plus 25%, or 75% of the market. That leaves just 25% for electronics, jewelry, photography, and, oh yeah, AI data centers. We haven't even talked about AI yet. Goldman Sachs says data center power demand will rise 160%. Every H100 chip, every server rack requires high-grade silver connectors. So let's revisit the viral headline, "Not enough silver." Is it true? If you look at just BYD today, maybe there is enough. But if you look at the cumulative aggregate demand of solar, N-type, plus future EVs, solid state, plus AI, the answer is a resounding yes, there's not enough. The pie is too small. And the guests at the table, Samsung, BYD, Elon Musk, the solar giants, are getting very, very hungry. So we have established the demand side. It is a runaway train. Between the solar N-type revolution happening today and the Samsung solid state revolution locked in for tomorrow, the appetite for silver is infinite. But here is the problem that breaks the system. The supply is finite. For the last decade, global silver mining production has been flatlined at roughly 800 to 840 million ounces a year. We cannot just turn on more mines. It takes 10 years to permit and build a mine. The mines that are producing today are dealing with falling ore grades. They have to dig up more dirt just to get the same amount of silver. We are already in the 5th consecutive year of a structural deficit. We are eating into the above-ground stockpiles. We are draining the vaults of London and New York to feed the factories of China. And this brings us to the moment where the industrial panic collides with the banking crime. While Samsung is buying mines to secure their future, the banks are scrambling just to survive the present. We have been tracking a specific, terrifying data point involving JP Morgan. Rumors from institutional analysts suggest that back in October, the same month Samsung secured their mine, JP Morgan entered into a massive lease agreement with the Industrial and Commercial Bank of China, ICBC. They reportedly leased 4,000 metric tons of physical silver. That is 129 million ounces. Why? Because the West was dry. To keep the comics game going, they had to borrow metal from the East. But a lease has an expiration date, and that date is reportedly early January 2026. In less than 2 weeks, JP Morgan has to return 129 million ounces of silver to China. If they don't have it, they default. If they try to buy it on the open market, well, imagine what happens to the price when a buyer needs 15% of the annual global supply immediately. And do you want to know if this is real? Do you want to know if they are panicking? Look at the vault data from yesterday. We caught them. The daily logs show that JP Morgan just removed nearly 2 million ounces from their eligible vaults. This is metal that was sitting quietly in storage. They are raiding their own cupboards. They are scraping the bottom of the barrel. This is not the behavior of a bank that is well capitalized. This is the behavior of a bank that is desperate to find physical bars to ship to Beijing before the deadline hits. They are fighting a war on two fronts. The industrial front, Samsung and the solar giants are sucking up the 800 million ounces of mine supply. The sovereign front, China is demanding its 129 million ounces back. And stuck in the middle is the price. People are looking at silver trading at $67 and asking me if it's a bubble. They are asking if they should sell and take profits. I look at them like they are crazy. A bubble is when the price goes up on hype. This isn't hype. This is a shortage. The price isn't going up because people are excited. The price is going up because the metal is disappearing. The BYD rumor about 160 million ounces might have been technically premature, but it was spiritually correct. The demand explosion is real. It's just coming from Samsung batteries and solar panels instead of BYD's current cars. But the result is the same. There's not enough silver for the green transition. There is not enough silver for the AI revolution. And there is definitely not enough silver to bail out JP Morgan. We are watching a game of musical chairs where the music has stopped and there are 3 chairs missing. Samsung grabbed a chair, China grabbed a chair, the solar industry grabbed a chair, the banks, the paper shorts, they are standing there with nothing but debt. So here's my final warning. Do not be distracted by the volatility. They will try to smash the price down one last time before the new year to cover their tracks. But you know the math. You know the chemistry. And now you know the players. $67 is not the top. $67 is the price of admission to the last commodity on Earth that is truly essential and truly scarce. Get your physical. Hold the line. Because when the 1 kilogram battery becomes the standard, we aren't going to be talking about $67. We are going to be talking about unobtainium.